Hi, Rudy Martin here, editor of Emerging Market Winners for Uncommon Wisdom Daily. My message is that U.S. semiconductor stocks are on fire. Year to date, the Philadelphia Semiconductor Index is already up 9.5%, with the top 5 stocks in the group up an average of 33%. Imagine that, getting back a third of your money in less than 1 month. Now, obviously, not all semiconductors are buys, so where's the action likely to occur next? One place to look at is at some of the smaller and mid-sized stocks set to release their earnings next week. So take a look at MKS Instruments, ticker symbol MKSI. It reports on Wednesday, February 2nd, and looks interesting here. It sells at 11 times next year's estimated PE, and the long-term growth rate is forecasted at 18 to 20%. In addition to its core semiconductor business, MKS now participates in 3 of the highest growth markets out there. For example, LEDs, or light-emitting diodes, will benefit from the coming phase-out of the incandescent bulbs. Flat panel displays now are being used for more than just TVs, and solar cells are forecasted to grow more than 20% over the next 3 years. MKS is not a huge company, but the stock can move. The market value on this one is only $1.4 billion, and it's up nearly 11% over the last 5 trading days alone. Another stock to take note of is Novellus, ticker symbol NVLS. This $3.3 billion market value company manufactures equipment for fabrication of integrated circuits. NVLS reports also on Wednesday, and the stock trades at a mere 12.6 times estimated earnings, which at this point looks somewhat low. For the more adventurous investors out there, take a look at stocks with high short interest ratios. That may indicate that potential for investors who are short the stocks will have to buy the shares at substantially higher prices. So here are 3 companies in the semiconductor industry as ranked by their short interest ratio. First, Micrel, ticker symbol MCRL, has a short interest ratio of 16.8, which equates at this point to 9.3% of its shares outstanding. Investors are not too keen on releases that show declining revenues, especially in the hot semiconductor sector. But it looks like this one has $109 million of cash on the balance sheet and real cash flow from operations, which should allow it to buy back shares, creating additional shareholder value if the stock falls. Another one to look at is NetLogic Microsystems, ticker symbol NETL. That one has a short interest ratio equal to 22% of the shares outstanding. It reports next Wednesday, and the stock has already started to move in sympathy with the sector. Now, the upside on this one may be limited because the stock's already moved up 62% over the past year. Yet, looking at the options, the volatility has been falling, and it looks like there's much less downside risk on this one than in the past. I would not be shorting NetLogic here. And finally, First Solar, ticker symbol FSLR. That one has a short interest ratio of 12.5, which translates into a whopping 19% of the shares outstanding. Now, just a few weeks ago, First Logic share price jumped after Goldman Sachs upgraded the stock with the following rationale: own long-term structural winners that are low-cost, well-funded producers with visible demand and credible capacity for growth. I agree with that sentiment, and it sounds like a good recipe to use for any stock pick. That's my take on it. Thanks for watching.